First in our series of common missteps that investors of any experience level can make is watching too much news or consuming too much financial media. And I know this isn't a new topic. We've talked about this several times, and it's something that every investor, even the most seasoned investor, can fall prey to. While we say not to watch too much news, obviously we do need to be aware of what's going on. We need to stay informed, but it's important to stay informed and not fall prey too much to the gloom and doom side of the news, the sensationalized side of the 24/7 cable news. We would argue that one of the greatest disservice that our clients face is the news media and the stock market and the constant updates of stock quotes, whether it be on indexes that we follow, individual stocks that we hold or follow, but that instant pricing of every second of every day leads to anxiety, can lead to poor decisions being made because of the overwhelming nature of instantaneous prices on investments. We don't get instantaneous pricing on things like our home or our rental property or our minerals or any of these other type of things, and we tend to make much better long-term financial decisions for it. So that is a common misstep that we see a lot, is constantly watching the markets. There are so many examples of past predictions that have either never came true, came partially true months or years later, etc. And maybe a few once in a while get lucky and nail it on the head. But regardless, that information from experts and that overload of predictions is daunting for individual investors and is a very big misstep. There are so many instances that we can go back in the past where the end of all was predicted, or markets were going to crash 75%. There's even instances where the media parades around certain individuals, experts, and says they called this, they got this right. But then you dig a little bit deeper and find out that maybe they partially called it, and they called it 2 years before it happened. Well, in that case, all things being equal, an investor that just bought and held without that information probably would have had a comparable or better return anyway, because if the call was made a year or two earlier, the market advanced quite a bit before it went down. So there's just no perfect science to that, and that is a common error that can be made, is consuming too much financial media. And while, again, it is important to stay informed, it's important to not fall for gloom and doom and make instant decisions on your portfolio or your financial future that you might regret later. Lastly, one of the most important things, I think, in an atmosphere that we have news and predictions and everything at our fingertips 24/7 is the idea of hiring competent managers with sound discipline strategies like we have in portfolios. That does a lot of different things, but one of the most important things that I think it can do for us as investors in this type of 24/7 media news environment is the manager is managing the discipline, whether it's owning individual companies, other types of investments. They are non-emotional. They're, to the best of their ability, making decisions based on sound information, interpretation of data. They will not always be right. No one ever will. But it takes some of the anxiety and some of this chaos of 24/7 news and constantly watching the markets out of the equation.